Okay, so we'll just run through this quick trade that got entered into end of last week. So you can see here, it's currently Sunday the 13th of June, so we got entered onto this trade at the close of this candle here on the 11th of June, so Friday. Entered short based on the close of this engulfing candle, so all that means is that this bearish candle here, so the black candles are bearish, the white candles are bullish. So the close of this bearish candle here completely engulfs the body of the previous candle, so that was our entry reason. Our reason to look for a trade, so our reason to look for that bearish engulfing candle is because the black moving average is below the red moving average. So when the black's below the red, we want to look for a short position. When the black is above the red, we want to look for a buy position. Yeah. So the black line is below the red line. So we've got our first piece of criteria is the black's below the red. Our second criteria is the bearish engulfing candle. So get the close of the candle here. So the trade is open. This is all done by the software. So the trade's open the moment this candle closes as a bearish engulfing candle. So the trade's opened at this level here. You can see the sell, and then price is waterfall down. So our initial stop loss is at the previous high. So our initial stop loss was at this red line, red little dash here. You can see the stop loss at 133.36. No, 133.372. That was our initial stop loss. As soon as this red line drops below our initial stop loss, we trail using the red line. So the stop loss follows this red line down. You can see here it hasn't dropped back down to here yet. So it's based on the close of the candle. So the moment this candle closes and the next candle opens, this red line will go and follow the red line to the downside. So this is our stop loss at the moment. This dashed red line here is our stop loss. So at the moment it's at the previous level for this. This is a channel, so it's the high of the previous 5 bars. So you can see here we've got 1, 2, 3, 4, 5. So out of these 5 candles here, the highest point is this level here, which is why this red line has now gone to this level here. Whereas if we were to ignore this current candle here and go 1, 2, 3, 4, 5, the previous high of the previous 5 bars is at this level here. So this Don-Chan channel has gone down to this level here, and this is where our stop loss is based at the moment. So like I say, it's Sunday at the moment. The moment the market opens later on this evening, and we get the next candlestick open, this red dash line here will go down to here. Unless obviously the candle opens slightly higher, then it will go to the highest point of the previous 5 bars, which will be the high of this candle which is about to open tonight. So we're trailing our stop using this method here. Obviously if it was a buy position, we'd be trading it based on this green line, which is slightly different, which is it's the previous low of the low of the previous 37 candles, whereas this is the previous high of the previous 5 candles. So DCH5, DCH37. So we've got different trade management techniques based on whether we're long or short. Yeah, and that's based on testing every single Don-Chan channel available. It just works out that if we're short, it's better to trail it by 5, and if we're long, it's better to trail it by 37. So yeah, we'll wait till the market opens later on this evening, and we'll see how that goes. So you can see the current profit at the moment down here, minus the commission and the swap for holding it overnight. Yeah, so we're guaranteed profit now. So because this stop loss is below our entry point, we're guaranteed a certain amount of profit. So we're guaranteed £235 worth of profit at 31.4 pips. So we'll see what happens later on this evening. So just following on from the trade, we've finally closed out of that position. So the previous recording was Sunday evening. the market closed at this level here. So when the market's reopened, we've gapped down, so we've actually gapped in the direction we were expecting price to continue down. So we're in a short position, so we've actually gapped down, as you can see from the difference between the close price here and the open price here, but immediately reversed, and our stop loss was at this previous level here, so the high of the previous 5 candles, which is this price here. So as you can see over to the right, 132.815, 132.815 over here, and we can compare that to the actual close of the position here. 132.816 was where we got stopped out for a profit of £323 minus the commission and swap for holding overnight, obviously. And then as you can see, prices just continue to move higher and higher, back up to even above our original stop loss level, which was at this high here. So you can see price is now above our original stop loss, so it was worth trading in this position. So that was just a run through of one of the strategies to trade, and obviously how it's panned out and how it's worked. They say all of this is done by the software up here, so it automatically entered the trade and trailed the stop loss and obviously exited the trade for me. And this has happened overnight, as you can see, 1 o'clock in the morning, the timestamp down here. So I'm fast asleep at that point, but the software's running for me and managing this trade for me. So thank you for watching.